Bercetche. I am an anchor for Bloomberg TV, and I don't know if you had the channel on this morning, but we did launch our new show, Bloomberg Horizons Middle East and Africa. A little plug for Bloomberg over there. But I'm really delighted to be here today, and what a fascinating conversation we're about to have. Very happy to say that Adena Friedman is going to be sitting with me for the next 25 minutes or so, talking about Nasdaq as a company, its transformation as a company, what they are doing to incorporate FinTech, and the outlook for the future as well. So there's so much to get through. Adena, thank you so much for sitting down with us.
Absolutely, and congratulations on your first show.
Thank you. Look, you know, we are at Dubai FinTech, the summit over here, and so we will spend a lot of the conversation talking about FinTech. But before that, maybe, I think it would be nice to just sort of get an overview of how you were thinking about the macro environment. And of course, you know, market participants are looking to some of the data that came out last week, those jobs numbers disappointing somewhat to the downside. Just from your standpoint, how do you see the evolution of the US economy for the rest of this year, and what does it mean for listings?
Sure. Well, thank you very much. And it is such an interesting time in the global economy. I think that what you're seeing, of course, is with the higher interest rate environment that we're all navigating through. My personal view is that we're going to be dealing with higher rates for longer, because on the one hand, the US economy and other economies around the world, most notably here in the Middle East and Asia as well, are really continuing to show strong growth and resilience despite so much change and a lot of disruption over the last 2 years. And at the same time, with the higher interest rate environment, you know, the role or the goal of the Federal Reserve is to actually slow down the economy. You know, they have to make sure it doesn't overheat and have an inflationary environment that they can't control. So the jobs number, in a way, while it was lower, it's actually encouraging to think, okay, now we're going to start to see maybe a way forward where we're having a, you know, they always call it a soft landing, but a way for us to slowly slow the economy, manage down the inflationary environment, and therefore be able to lower the cost of capital over time. I think our prediction since the very beginning of the year has been most likely there would not be any sort of rate changes until the latter half of the year, and I think that is the case. But if we do see an environment where we know the interest rates aren't going to go up, and now we have an opportunity for them to go down, I think that gives investors more confidence in being able to underwrite risk investment, including IPOs. So we have about 80 companies that are on file to go public on Nasdaq. They want to be able to come out into the markets. We are starting to see some IPOs come out that are quite successful, and I think that's giving people more confidence in coming to tap the public market. So our calendar is starting to get more interesting and more robust over the coming weeks and months. But I also think there's going to be some companies that just choose to wait until after the election, choose to wait for 2025.
Of course, the U.S. election's a big question mark for the rest of this year. You mentioned 80 companies potentially looking to list this year. How does that compare to prior years, just so we can have a bit of context?
Yeah, I mean, in general, certainly during the height of 2020 and 2021, that was well over 100. But over the last few years, it's been a relatively steady number. The difference is we are having concrete conversations on timing today, whereas before they were on file and waiting and without any clear understanding of when they would go out.
Yeah, I mean, you mentioned 2021, which obviously was a very strong year for listings, not just via the public exchanges, but also via SPACs back then. And it feels like it is a very different environment today. Investors are being a lot more discerning about the companies they look to deploy money in. Can you expound on whether you think the investment climate has changed versus where we were a couple of years ago when the market was more flush with liquidity?
I would say it's changed pretty dramatically. I think that if you think about the environment that investors were in and the market was in, a free money environment is what I would call 2020 and 2021. We had started to bring interest rates up prior to COVID and try to normalize the rates in the environment because of the strength of the economy. But then with COVID, I think that the U.S. government made the right decision to manage the risk of COVID through a dramatic change in interest rates. A free money environment, is a very different risk environment for investors to consider, and the SPACs are really designed for, I would say, a lower cost of capital environment. Yeah. Therefore, as we're looking now, number one, I think that investors are looking for companies to be profitable or to have a very, very clear path to profitability over the short term. Yeah. So the level of financial discipline that you've seen companies undergo over the last couple of years has been somewhat disruptive, but also very important to build resiliency into their business model. I think today investors are looking for resilient growth, and there are many companies that have that characteristic, including Nasdaq. But I think that as a result, those are the companies that investors are going to gravitate to when they're considering IPOs. And it's going to be very important to be able to discuss that and describe that in the IPO roadshow.
Yeah, well, that's about the market. We saw, this transformation in the market, evolution, I would say, rather than a transformation when it comes to the companies that are looking to go public in the listings environment. But let's talk a little bit more about Nasdaq. Maybe let me rephrase the question a different way. How would you describe what Nasdaq does? Because most people think of Nasdaq as just an exchange, but of course, it has developed so much over the course of the last few years. There has been a transformation, and Nasdaq is also a solutions provider.
Yeah, thank you. Well, we are very proud to be an exchange operator with a wonderful market with the Nasdaq stock market. We also operate the largest multi-listed options marketplace in the US, and we own the exchanges in the Nordics. But we've been able to leverage our position as a market operator to really expand the impact we have on the industry, and we've done that through technology. We've had a very concerted effort and a very concerted strategy to focus on what makes Nasdaq strong and what makes markets strong. So markets really are driven by liquidity, transparency, and integrity. And if you think about the strength of markets and what really gives investors confidence and gives companies confidence to join the public markets, those three things really underpin them. So as we've been growing and expanding our remit, we've focused on those three key pillars. Our index business and the solutions we offer to corporates and investors to help them navigate the complexities of the capital markets are really about transparency and data analytics. We have, of course, our own markets, but also we provide technology to other markets and now to market participants to help manage risk and their market operations so that they can provide more liquidity into the markets. And then we have a complete suite of regulatory technology, including anti-financial crime technology, that supports the integrity of the entire financial system, including payments. So one of the areas that we've been getting much more engaged in is the payment space, supporting banks in managing crime out of the payment rails.
Yeah, so let's talk about the acquisitions you've made in order to get to this point. Back in November last year, you closed on the deal with Adena. That was your biggest ever acquisition. You paid $10.5 billion. It's a big sum of money to acquire the risk management and reg software company. How is the process of integration going, and what growth can you expect to see out of this acquisition?
Well, if we think about strategically, Adena has two businesses. They have Calypso, which really is a risk management suite of risk management tools that support the underpinning of many, many market participants in the world. So they really look at all of the elements of anything past the trade. So whether it's collateral management, capital management, treasury management, all the things that help the banks manage risk, which then enables them to put more capital into the market ecosystem, is a really critical kind of operating system within the banks. And then the other is the RegTech side of it, so regulatory reporting, which is AxiomSL. And that supports the largest banks in the world, and it's a very global business. It connects to over 110 regulators in 50 countries to make it so that you can be much more efficient in managing and accurate in your regulatory reporting. So you say, well, why does Nasdaq own those things? Well, as we think about how can we be the partner to the market ecosystem, into the financial ecosystem, I went and spoke with a lot of banks, including actually some banks who are here. And it was interesting when I came to them and I said, what can we do to help you the most? What can we do to do more with you? Their biggest challenges were data management, risk management, and financial crime management. And so we really went through this concerted strategy to say, we want to be the trusted fabric to the world's financial system. Yeah. And so how do we bring in those capabilities around anti-financial crime through the Verifin acquisition and our surveillance system, and then risk management, and then data management, which really supports the regulatory reporting. That business between AxiomSL and Calypso is growing 10 to 15% a year. It's in that kind of range of overall revenue growth. It has about a mid-teens ARR growth. And yet it also has an amazing profitability because of the fact it's very scaled, supporting the world's ecosystem. So it is very consistent with what we want to be and how we want to manage it. We've done the integrations going very well, very smoothly, and now we're able to provide banks, brokers, and exchanges with critical infrastructure technology that supports them.
So you list these different areas of FinTech that you're involved in, market technology, data management, anti-financial crime, risk management, regulatory reporting, but then they're also not mutually exclusive. So you've got to think that perhaps there is a lot of opportunity for crossover. The type of client that is looking for help on risk management will also be looking for help on regulatory reporting. How much of crossover effects do you see?
Yeah, it's been fantastic to speak with the banks that we meet with all over the world to understand, again, what are their biggest challenges and how can we help them? And that conversation is a very rich conversation today. So we are expecting that over the next 5 years or through the end of 2027, we should be able to get to about $100 million of cross-sell in terms of annualized revenue from the relationships we have with the community that we serve today. And it's because of the fact that we want to make sure that we create a common platform that allows, for instance, data to flow from Calypso to AxiomSL or vice versa, or be able to take the underpinning of a market and provide more capabilities around collateral management, treasury management to support the markets. So there are a lot of opportunities for us to bring those solutions to be much more strategic in how we modernize markets and modernize the resiliency and risk management of the ecosystem.
So I believe it was Nasdaq who put out a report earlier this year about financial crime, correct me if I'm wrong, in which you said that you've identified that on an annual basis, $3.1 trillion is lost via money laundering, 500 million in fraud. These are substantial sums. What is how optimistic are you that we can bring those numbers down to zero? I mean, zero is the pipe dream, but how effective can you actually be in bringing those numbers lower?
I'm always optimistic. I'm an eternal optimist. So I think that what we really focus on is how can you bring data together to be smarter? And obviously AI is a huge unlock, both unfortunately for the criminals. So it also has to be an unlock for those who are fighting crime. And we really do see ourselves as crime fighters in the financial system. The team really rallies behind that as being a big part of our purpose. So what we do is in the United States, we're able to take data across banks and create a consortia data model that where we can apply very advanced algorithms and AI capabilities to find patterns and practices of behavior that really underpin criminal behaviors and criminal networks. And then use those analytics to be much smarter and take down the false positives that banks have to deal with and really root out true criminal behaviors. And then now we actually just launched our first Gen AI tool in our platform that automates the investigative side of things and takes down the time to do those investigations by about 90%. So you can use AI in a way that makes it efficient and much more effective in rooting out crime. I actually believe that we should all have that goal, especially in the fintech space, where we want payments to be safe. We want to build trust among consumers, among merchants, among banks. We want to make it so that we feel that the world is in a way safer by using our technology more effectively to manage all the payment rails. And Nasdaq's role in that is really to help with that crime management and make sure that we really support and help the banks around that, because that improves the integrity of the entire system.
How much of the fintech solutions that you're providing are underpinned by artificial intelligence? Do the two go hand in hand?
Yeah, so I think that you have to look at a few things. First, so actually the answer is that we have our first AI-driven order type in our markets that is approved by our regulator to be deployed into our markets. We deployed it last month. We use AI capabilities across our transparency tools to support corporates and investors and sustainability. And now we have our anti-financial crime suite. We're very excited to be able to apply AI into Calypso and AxiomSL going forward. But you have to look at what are the underpinnings that really bring that and make that possible. In our opinion, moving markets to a cloud-based system or moving all of the technology into more of a cloud-based model where you can actually leverage the capabilities of the cloud providers, but also have the modular data, the modern data management underpinning your systems. The second is having a lot of proprietary data. So how do you bring data together and create your own data lakes that make it possible to look for things that you might not otherwise see? And then, of course, bringing in data scientists and bringing in very advanced technologies, I think are the area, that's underpinned by having a modern infrastructure. We've been on a journey since 2008 to modernize our infrastructure across that. Our next generation trade lifecycle technology is completely cloud native. You can deploy it in cloud. You can deploy it in an on-prem cloud, which we're doing within Nasdaq's markets. Or you can still operate it on-prem, but in a containerized way that makes the data management much more nimble. And that then serves as the foundation to bring AI into every element of the business.
So key to efficiency, of course, but then investing in AI involves investments, and investments equals costs. So from a business perspective, what does that do to your margins? You talk about these high growth areas, so the businesses are growing fast, but presumably at a lower margin.
Well, actually, it's really interesting because we've been through all of the investments we've made in the technology side of our business, and by focusing our company on what's truly strategic to our clients, over time, we've actually increased the margin of our business by 600 basis points over the last 7 years, while still investing in all of that modern technology. We've been modernizing every element of internal infrastructure, all of our client-facing technologies. We've made a major investment in our markets, and yet we've still been able to bring up our margin and unlocked a lot of growth. Growth allows you to invest, right? So if you can grow, you invest in the platform. And it's a flywheel. I think that one of the areas that we are very focused on investing in is across the financial technology solutions, because it unlocks so much potential for the client and it underpins future growth. Same in the index business. It's been a huge grower for us. And so how do we make sure that we're investing in our indexes, bringing AI capabilities into our index business to underpin growth?
And how are you thinking about the prospect of further acquisitions today to acquire growth? We spoke about Adena, obviously your biggest acquisition to date, but then you also acquired Verifin back in 2021. Are you on the hunt for more?
So we are very focused on organic growth going forward. We have made these very strategic moves within Nasdaq. We want to focus on integrating them. We want to delever the balance sheet to strengthen, the future balance sheet of Nasdaq, although we're extremely confident in our ability to do that. I think that we have over 100% cash flow conversion at Nasdaq, so we have a very, very strong business model to underpin that. But that's our focus for the next many years. I think that as we go forward now, we have a complete suite of capabilities to serve corporates, investors, financial institutions, and we have a kind of a great strategic remit to do that. In addition to, of course, running our markets and making sure that they are the center of capitalism.
Yeah. Well, look, we're here in Dubai at the Dubai FinTech Summit. So let me just ask you about your presence in the Middle East and what you see happening in this region.
Well, so we actually provide the technology to many of the exchanges in the Middle East, and we've been here for over 20 years, being a technology partner to the exchange community. We also provide every element of our solutions are offered and provided here in the region. And it's been an amazing journey. I mean, I love coming here. I've been coming to Dubai for 15 years. ICD is an investor in Nasdaq and a very strategic partner, and Issa is on our board. So thank you very much, Issa, for the partnership that you've had with us. But it is a special place. It is incredible how much the entire region is developing, how important this region is to the world's economy, to the world's geopolitical stability. I have to say, I think that it's an amazing place to be, and there's nothing like coming. So I do try to come as often as I can, because the energy that you get here, this notion that anything's possible, just sits here every time you come. And it's unlike anywhere in the world, I have to say. So I do love coming, but it is also a very important market for us, because we do believe that as we continue to expand what we're able to do for our clients, we can have more impact to even further globalize the economy that's here in the Middle East. And so we're excited to be able to do that.
And what scope do you see for these FinTech solutions that you're providing within the region?
Yeah, well, we already are a provider of some of the Calypso and Axiom XL tools are provided to banks in the Middle East, across the Middle East, including here in Dubai. One of the largest banks is one of our biggest clients, so we're really, really proud of that. And then we also, though, provide a lot of analytics tools that help family offices and sovereign wealth funds seek out asset allocation allocation strategies through our investment platform, which is in that corporates and investors analytics suite. And we provide our indexes into the region. So we have a full capability that we do offer here, and it's one of our biggest growth areas in the world, so we're very excited about that.
I guess when you talk about different jurisdictions, one of the questions that comes to mind is how are the needs of clients in this region different from other parts of the world? What are they looking for?
It's a good question. I think that first of all, we have to focus on, we provide solutions to support their activities here in the region. And those activities, frankly, are similar, but they have a different characteristic. You know, you have more family offices, you have more family-owned businesses. So how do we make sure that we help them understand the benefits of listing on DFM or listing in the local market, but also make it so that investors can navigate the global landscape as well. So not only do we provide solutions that help banks, brokers, investors navigate the markets here, but we also give them access to global standards that allow them to broaden their remit outside the region. You know, how do we make it so that they can be more globalized in their business operations through streamlining their capabilities and making it so that they can, you know, live by the global standards that exist.
And how do you see the listing environment evolving here as well? Because, you know, supply does sometimes actually beget more supply, and supply begets demand. So
I would agree with that.
Self-fulfilling prophecy.
I mean, it's been a very robust IPO environment in the region for the last few years, where it has not been in the United States. And so I think as much capital was raised here last year as was raised on Nasdaq last year, just in Dubai. And I think that at the same time, there's so much potential here, because you do have a lot of private companies. You have a lot of companies that the government has sponsored over many years, where if you know, as you think about how do you want to grow and expand those businesses, the public investor environment here is becoming richer and richer. I mean, like not so, well, yes, more wealthy, but I actually meant, you know, in terms of deeper and more interest and abundant, that really supports and underpins the market. So I know DFM is having more and more success bringing companies to market, and we're seeing that across the region. So it's very, very interesting.
Well, key to that, you've spoken in the past about the importance of, you know, your bread and butter mission is to provide liquidity and transparency to market participants and to capital markets. How can we build those markets and ensure that the liquidity and the transparency is there, not specific to the Middle East, but globally?
Well, I actually think that if we think about our role, if we provide technology to 130 markets around the world, so if we can provide consistency in the technological experience, or the experience that market participants have and investors have in every market around the world, and we have a consistent underpinning of that, connectivity, speed, you know, even market rules, the level of integrity and surveillance that's done by the regulator, so that people feel that there's a safe environment to come and deploy your capital. I think we feel like we have an interesting role to play in really supporting the evolution of markets and economies all over the world, including in the Middle East. And so as we've been modernizing our markets, we're bringing the exact same technology around the world. And we have heard from market participants. In fact, we have one market participant who will go to exchanges around the world and say, I will come to your market if you use Nasdaq's technology, because it's so much easier for them to connect in on the back of knowing that that technology is there, and then also the surveillance that the markets have.
Sounds like a good client.
It is a very good client.
How closely do you work with regulators around the world?
We actually have, we provide technology to many of the central banks, including in the region, as well as to the regulatory apparatus, so the capital markets regulators. Capital markets regulators generally with surveillance. How do they surveil the activity in the market? And with the central banks, it's more on their own trading apparatus. So all of the infrastructure, the Calypso tool really supports their ability to trade and manage monetary policy, as well as to look at the enforcement side from a treasury risk management, capital risk management, collateral risk management. So it's actually, it's one of the most interesting parts of the job, is that we get to sit in the center of the economic apparatus of a country. So it's very different than you have in a lot of other businesses. When I was a kid, I wanted to be in international relations. That was actually, I studied political science. And so being here at Nasdaq, it actually allows me to have that role, but also in a commercial setting. So I'm pretty lucky.
I feel the same way. I also studied international relations and economics. I ended up in the Middle East, so it all came together. Look, we only have a minute or so left. Let me just ask you this. In 10 years' time, do you think Nasdaq will be more of an exchange operator or a FinTech company?
Well, I would have to say, if we look at the growth trajectory of our business, and already we generate more revenue on the elements of our business outside our exchanges than we do in our exchange business. So I would have to say we are likely to be more of a FinTech provider over the next 10 years than as an exchange operator, although both roles are equally critical to our strategy. So we see ourselves as having the exchange creates the foundation that allows us to grow and expand everything we do. It's all interconnected.
Yeah, well, that's a place to leave it.
Great.
Adena, thank you so much for the conversation. Adena Friedman, CEO and President of Nasdaq.
Thank you.